What's up guys? Welcome back to my channel. In the previous video we talked about Bitcoin and how it moves based on the risk levels. So just a short recap, we created this chart wherein we can see the price of Bitcoin move along these corridors. You can see this reflects like diminishing return, right? Um, the prices of the top and the lower bands are converging, suggesting that you're getting less and less volatility. And in the price, that's what we're always also seeing in the risk. So the risk reflects the current state of Bitcoin compared to how it historically has moved, right? So historically, when Bitcoin has been in this level, this is like saying that it was similar to the time in 2022 where Bitcoin was around the same risk level, 0.47. And similar risk levels show like similar stages in Bitcoin's life cycle, right? So in 2022, even though the price of Bitcoin was only at $29,000, it's sort of similar to now at $66,000, right? So this is how to read the price of Bitcoin, and it shows us how the price of an asset like moves over time, right? So for different assets, for example, gold has been moving up a lot recently, and if you look at its risk, it has been been pretty high. So risk basically gives us an idea of how an asset moves or where an asset is compared to its historical performance. If you want to check out or have more information, I'll link the video of the previous video description below, so you guys can watch that video and gain more context. In this video, though, I wanted to talk about expected gains, right? So, how much can we expect to make from an asset? So, there's two ways that we're gonna look at this. The first way is the geometric mean, and the next way is the dice rolls. Maybe we'll talk about dice rolls in the next video, just because there's kind of a lot to cover. So, what does the geometric mean tell us, right? So, in the in this video, what we're really trying to do is to figure out how much do I expect to make from Bitcoin, right? Because some people have completely unrealistic expectations of Bitcoin. They're like, oh yeah, I'm gonna invest $1 and and in like 3 years, I'm gonna be a millionaire. So that might not be possible anymore, right? The geometric mean gives us an idea of what return can we reasonably expect from an asset, right? So here, for example, you can see that this is the graph of the geometric mean, and I call it absolute because basically what this graph does is it asks the question, what daily interest rate do we have to multiply to the starting price of Bitcoin to get the current price, right? So how do we read this, right? So first, we just look at the inception price. That's basically the first price of Bitcoin in my data. And then we just look at what is the interest rate that we multiply to this inception price every day for 4,649 days is the total number of days in my data to get to the current price of Bitcoin, right? And that number is this number, so it's 0.00142. So basically, if you multiply this number to this price, 4,649 price, you get the current price of Bitcoin, right? So if you don't believe me, let's just do this 90.17. I already did it a while ago, so it's just this, and you get the current price of Bitcoin. So that's basically how this works. And what this does is it gives us an idea of what is the average compounding interest rate that we can expect from an asset like Bitcoin. And also it shows us how it's historically moved. So if you look at this, it shows you that at the start, the daily compounding interest rate was really high. It was almost 3x per year because we're in the yearly view. So here, Bitcoin was doing almost 3x per year. Whereas now, it's only doing 68% per year, right? So it really depends on the slope of Bitcoin, right? So when Bitcoin is high, obviously it takes more interest per day on average to reach that price from the starting price. And when it's low, it takes less interest. But this gives us an idea on how the interest is actually moving, right? So at the start, it was more explosive, and now it's less explosive. So that's also why this gives us an idea of we can't really expect the same amount of gains from previous cycles to the current cycle, right? Previous cycles it was moving like 3x, but you can see in this graph it's been getting less and less throughout the year. So if you look at the predicted, this like smoothens it out, and you can see it kind of like asymptotically go to a certain value. So this is how to make expectations of Bitcoin, right? So currently you can make a 0.68% gain on average year on year in the next few years. But again, this is pretty stochastic. So some months it'll be more, some months it'll be less. But this is what it looks like on average, and this is what you can expect. But you know, the problem with this also is that it's pretty dependent on the starting price, right? So the starting price is at $90, and it's the ending price is also affected by all of the different interest rates that happened um, through that time. So at the start, we were having all these explosive moves. Maybe we don't want to consider that for the future price because the end geometric mean is just the mean of all of the interest rates from the start. And it might not make sense for us to say that, oh yeah, in the future, we're considering it to be 0.68 because of all of these numbers when realistically you're not gonna get a 3x yearly gain anymore, right? So if you want, some people look at the rolling mean. So instead of taking it into consideration the starting date and the ending date only, we're looking at just a rolling 365 yearly window and seeing the start of that window and the end of that window and getting the daily average interest rate. And if you do that, you get this graph, right? So now it's less susceptible to the peaks of peaks of the past, but then now, if Bitcoin has been falling recently, it's gonna be less than one, right? Um, and the and the average is like basically just average. But here we can see a similar trend. If you look at the rolling, the tops of the previous values are the tops, um, and it's you can see it's much more explosive at the past, right? So at the past it was like really explosive when it hits the tops, but then you can see also some kind of diminishing trend line from top to top here. And the average here is just the simple average of everything. Um, yeah. So this gives us an idea of where the price can become in terms of compounding interest. And but actually, this is one of the hardest things to predict in finance because um as you can see, like it's very volatile, right? So sometimes the average expected interest rate is high, sometimes it's low, and we can only give like summary statistics on what it's what it is on average and get a glimpse of what it is historically. But predicting on what it'll be like in the future is a bit hard. You have to like just make guesses. Like in this graph, for example, um, I would say that it might go down in the near term ish future, right? Because if you see it, it looks like it's like hopping in these cycles. So probably the average for Bitcoin is gonna fall in the coming months. And I just want to show you guys actually what this looks like for other graphs. So for gold, for example, gold has been increasing so much recently, right? And you can see here, gold is pretty high in terms of its geometric expected gains. And if you feel like this trend continues, like it's just going up and down and up and down, um, this might go down sooner than later. But there has been periods where it's been extended for you know big periods of time. So for example, in this last period, It was extended from 2009 to 2012, so almost like what 3 years, 3 years above this line. Um, and over here, for example, it at the very start of my graphs, you can see it hit levels pretty elevated, much more elevated than we are now, and that actually corresponded to it falling more in terms of the interest that you get. So that's something to keep in mind. I'm not buying gold right now simply because I think it has been going up so much. And yeah, just to illustrate this, we also have a comparison tab comparing the different interest rates of the different assets. So if you just get the simple average of all data, you can see here the simple average is like 3x for Bitcoin, 6x for ETH and gold. Gold and the S&P is like averaging 17%. But again, the reason why the future, expected return or interest is hard to predict is because this is gonna change, right? So if you just look at the past year, it's wildly, wildly different, right? Gold is like doing 61% year on year if you just look at the past year's performance, while Bitcoin and the S&P is doing almost pretty similarly. ETH massively underperforming on the 1 year time frame. So this comparison tab um, is useful in seeing in comparing it. But again, you really have to look at all the data to get a clearer picture of what's happening. For me, the 61%, if you look at it, isn't sustainable for gold. Because if you look at gold, 61% is like over here, and historically, it's never been really that high except for the 1800s. So, am I willing to scale into this asset at this point in time? Maybe not, right? So I haven't been buying gold, but if you did buy gold, down here when the expected when the geometric mean was much smaller, you would have capitalized on this entire insane run, right? And again, and it's not a sure thing because at this point it was still relatively high. So it's just about looking at different data points and piecing together what the market really looks like. So how do I use these graphs so that you guys can emulate how I'm consuming these graphs? Basically, the way I consume it is I look at the rolling geometric mean and I use this almost like an indicator of when to buy certain assets. So Bitcoin, for example, looks very predictable, right? It's going up and down and up and down and up and down. And so the reason why I haven't bought Bitcoin yet and also ETH is because I expect this to go down. Like if you look at this chart, it looks like it's following a pattern of just up and down. If this suddenly went up, I guess it could, like here, it was like here and then it suddenly went up. But it doesn't look like that's how you would like draw this graph out of pattern, right? So I'm waiting for Bitcoin to fall down here before I scale back in. And this is actually in line with the risk level. So if you look at the risk, which is a different view of the data, Bitcoin is around here, right? And it looks like it is still gonna fall. So looking at those two things, I'm slowly pieced together that yeah, maybe this isn't the time to buy Bitcoin. ETH on the other hand is pretty low. Like um in terms of risk, ETH is like really down here, so it's like almost zero risk. But if you look at the interest rates of Ethereum, it's around here in the midpoint, right? Um, so it seems like there might still be some chance for it to fall. So if you like connect these bottoms, maybe it'll just fall a little more here. And again, I think that's what I'm expecting. If you didn't watch the previous risk level chart, I go into a bit more in depth on why I think ETH will still fall. Um, but yeah, so that's how I use the geometric means rolling. It gives me an idea of where the yearly interest rate is looking like and how it looks like compared to historical values. And then I use it almost like an indicator um, to see if I'm gonna scale in or scale out in an asset. So for example, stocks, you can see it's also going through these cyclical movements. Um, yeah, and these lows correspond to like lows in the stock market. So right now it is falling. So I'm also not in stocks right now. Mostly in cash position. I'm waiting for my opportunity to enter. Yeah, so that's how I use the rolling. I use it mainly as an indicator to see when I'm gonna enter the market. Along with other data, of course. You're not gonna just use one indicator, right? So you need to piece together a bigger view of the market. And for the absolute one, it just gives me an idea of what is kind of realistic to expect. So, if I'm investing in Bitcoin in the next 5 years, and I use this 0.68, that's kind of what I expect the return to be. So, for example, if I have like $1,000 in Bitcoin, and then I times it by 0.68, which is like the yearly gain, and then I invest for like 5 years. You can't really project these out too far into the future, mainly because you can see the swings do really happen. But if you project 5 years into the future at that expected geometric mean, you can expect to make $13,000 um, in 5 years if you invest $1,000 in Bitcoin. Um, well, at least at the current rate that it's doing. So that's almost a 10x. That's actually crazy. So yeah, so that's how I use it. Obviously, some of these numbers are gonna be inflated. So for example, in this one, right? You can't expect the 0.68 to hold true for the full 5 years. Sometimes it'll be less. So, but at least it gives us an idea. Like this might be possible, right? But if you're gonna expect $100,000 in the next 5 years with $1,000 in, maybe not, right? So keep your expectations realistic. That's what I use the absolute one for. The rolling, I use it mainly to compare values and see if an asset is overvalued or undervalued. Um, yeah. So if you like this video, next video we're gonna talk about expected returns on in terms of like probability estimates and dice rolls. Um, yeah, if you like this content, like and subscribe. I made all of these charts public actually. So if you go to Lofi-Ledger.com, you guys can create an account and you can see all of these charts for free. This one is still locked. The EV one would still be locked, so I'll unlock it once I make the video. Um, I'm planning to give you guys this charts so that it provides value for you guys and you can see and analyze the market in a similar lens as I do. But yeah, stay tuned for the next video. It's gonna be an interesting one, and yeah, I'll see you guys next time.